Okay. All right, I'm going to click start. Are we good?
Sounds good.
Good luck.
Thank you.
Thanks. Start. Q&A. Oh. Welcome, everybody. Thanks for joining. We'll obviously give a little more time for some more people to jump on. Hi, everybody. Thanks for joining. We're just going to give probably a couple minutes past noon just to let everybody get on before we get started so nobody misses anything, but we should be getting started shortly. If you have any issues with audio, sound levels, that kind of thing, you don't have the option to unmute or speak, but you can either send a message through the Q&A function on here or the chat function. We'll be monitoring both of those for questions and things throughout the presentation. So feel free to use those if you're having any audio visual issues or have any questions along the way. Welcome, everybody. We're just going to give a couple more minutes, maybe 2 more minutes, 1 more minute or so for people to maybe get their lunch out of the microwave and get to their computer. I have to say, that's probably been one of the biggest perks of pandemic work life is not having to pack a lunch every day.
Options increase exponentially.
Yeah, you can make grilled cheese right on your stovetop or whatever. You don't have to rely on leftovers or sandwiches.
Back, it's definitely a little bit better.
Although snacking potential throughout the day has also obviously gotten much greater exponentially. That's probably a bad thing.
We buy a lot more pretzels at home.
Okay, yeah. I just have a very light, pantry and fridge inventory because I know if I'm bored, I just think about what's in there and I'll eat it all day long.
Yeah, I think I have that problem anyway. And I saw someone wrote that they become a short order cook. I feel like that is half of my life, even pre-pandemic. So I sympathize with that.
You just have to set kitchen hours, kitchen is closed and open only at these intervals of time. That would drive me nuts too. I like a clean kitchen. So even when I host family around Thanksgiving and all day long, people are in and out, I'm just like, I just cleaned it and now it's dirty again.
Yeah, no, you get it all cleaned up and then someone who didn't touch their dinner wants yogurt or Danimals or bananas.
Yeah, I can see that. All right, what time do we got here? 12:03. Do you want to give it to 12:05, Benny?
Yeah, that sounds great.
Okay. And just a reminder for those who are joining us just now, if you guys have any audio or visual issues at all, you can just go ahead and throw a note in the chat function or the Q&A function. We'll be monitoring both of those throughout because you unfortunately can't unmute yourself and speak. So be sure just to throw any notes in there. We'll get started shortly. Kind of a gloomy day out there too.
I know, trying to milk the last of what we can out of summer.
What's that?
Trying to milk the last of what we can out of summer.
I think we're done now. Yeah, I think we're into fall weather now, officially.
Yeah. Okay.
People seem to be looking forward to that, so.
It's not too bad.
All right. All right, so I think we will get started. It's 12:05, and if anyone else comes in, they can just jump in. And then So a couple housekeeping kind of notes beforehand. We are recording this presentation, so we'll provide a recording to everyone afterward, as well as the slide deck. So if you miss something, you can refer back to that. And of course, you can always reach out with questions afterwards. And again, if you're having any like audio visual technical issues, anything like that, you need one of us to speak more loudly, repeat something, or if you have questions, you can direct those to the chat function or the Q&A function, which you should see on your menu options on Zoom. Unfortunately, you can't unmute yourself and speak in this presentation, so you will have to submit it through the chat. So otherwise, we will get started. Are you ready, Vinny?
Sounds great. Looking forward to it.
All right, cool. Well, thanks everybody for joining us today. So I'm really pleased that Vinny from Lippis, Mathias, had agreed to do this presentation with me and partner on this. Today we're going to go through a pretty high level, but still pretty expansive amount of information on the subject of wage and hour law and regulations, both here in New York State and federally. And hopefully you guys walk away with a lot of helpful information that you can take back into your business. And again, if you have more detailed questions, you can follow up afterward with questions, and we'll have contact information at the end. So my name is Emily Martin. I am the owner and founder of Ally HR Partners. I am a small business HR consultant, a fractional HR person. So basically I work with small and medium-sized businesses, sometimes large employers as well, on meeting their HR needs if they don't have their own HR person on site or on staff, or if they need a little bit higher level expertise or project outsourcing. So I work with clients in everything from basic compliance stuff like this wage and hour information we're going to cover, but also more strategic HR initiatives on basically anything hiring, performance management, all those fun HR topics that are probably more important than ever. And then joining me today, I guess, Vinny, I'll let you introduce yourself.
Sure. Vinny Miranda here. I'm a partner in Lippis Mathias' Labor and Employment Group. My practice really focuses on employment law, counseling, and litigation, both on the counseling end, wage and hour, discrimination issues, hiring, firing, how to classify workers, drafting, negotiating employment agreements. And then unfortunately, when some of these issues go into litigation, we handle those as well with administrative agencies and in state and federal courts as well.
Great. Yeah, so we kind of feel like together we're bringing you guys the best of both worlds. Hopefully you never get to the point of having to call Vinny, being served paperwork or, a claim from the DOL or some other great employment governing body. So, my business is more of kind of the proactive steps you can take in becoming compliant, setting employment policies, creating a handbook, conflict resolution and things before they get to a complaint level, coaching on talking to your employees. So that's kind of how Vinny and myself work together. Our work fits together. But if you ever do get a claim, because they happen, then of course you can work with Vinny, or Vinny and I can work together on serving you on dealing with those issues as well. Great. All right, so today we're talking about wage and hour issues, and this is a topic that I've done quite a few presentations on, and it's pretty timeless because, this is always a hot topic, high target issue for the DOL, historically really at the state level, and will continue to be that way, but unfortunately probably now more so at the federal level. The reason this is super important to all employers, again, is because if we're talking about places where, whether it's frequency of claims or just the financial hit that it can cost you, wage and hour claims are probably the number one area. So if you're not doing these things correctly, so if you're not paying employees correctly, basically, you can owe back pay to employees, back up to 6 years, actually, in some cases. liquidated damages, so just, penalties and things just for not doing this right. Fines, typically I've seen up to 25% of what you owe. So whatever you owe an employee in New York State, whomever would tack on 25%. And again, really, I heard of an anecdote a long time ago. I don't know if it's still true, but if you really look at all the other claim areas of employment claims, especially in New York State, and combine all of them, wage and hour still exceeds all the others combined. And again, because it's a money-making area for employees, but also, the government, to make money off of employers. So there's huge benefits to catching and fixing problems on your own before someone makes a claim, or you just get an auditor coming in. And, obviously huge benefits also to just being proactive and setting up great practices and policies from the start. Anything you want to add here, Vinny?
Yeah, I think your comment about how it's lucrative to go after it does seem that, and when we see claims and litigation come through, that if you compared wage and hour as opposed to discrimination, obviously every case is different, but I think with the way that damages are calculated in this context with liquidated damages and civil penalties, that even with the lower wage workers, and if you get into class or collective actions, certainly they can be much more impactful on a bottom line. So it's hard to be compliant in all these areas that we're going to go through, but that preventative maintenance is really, really worth it.
For sure. And then there's also, we'll talk about if you're not using your payroll or time and attendance systems or software to help manage a lot of this and automate a lot of this, there's ways to do that as well. So,
yeah.
Go ahead.
Yeah, I would just really, it's sort of emphasizing your points, Emily, that, you have to be careful for what you stated. And then also we have dual federal and state oversight. So if you operate in whatever states that you're operating in, you need to consider what their regulatory scheme is on top of the United States Department of Labor. So obviously we have the New York State Department of Labor. If you have a workforce in other states, they have their own regulatory agencies and they have different rules than New York. And then there's also sometimes the local municipal laws that you have to pay heed to as well. And if you just look at the numbers, this really isn't anything in the abstract here. There's that, and really it averages out to about $250 to $300 billion alone in back wages that the U.S. Department of Labor is recovering a year. So that doesn't include liquidated damages or civil penalties. They have about 20,000 cases a year. If you look over the past few years, it's kind of going up and down. They have 700 investigators. New York recovers about $30 million a year in back wages. They have 12 field offices, 100 investigators. So you'll hear a lot about the top industries that get targeted: construction, retail, food services, healthcare. But certainly all it takes is one employee who is disgruntled, or you may not compliant with, to file a complaint, and then you can have an audit in your workplace. And the information that they're seeking is usually much wider than what the actual issue is. And, as we'll talk about today, I think that this, once we, if we can move past the pandemic, this area is one certainly that the Biden administration was focused on. I think they view it as a tool by which they can help the middle class. When he was vice president, Biden was the head of the middle class task force, and he has his nominees in place for the Department of Labor. They have records out there that we know about. We'll talk about that a little bit later, but they're already taking positions where they're not as generous with liquidated damages. Under the previous Obama administration, when Biden was obviously in, they were having a lot of sharing agreements with federal and state agencies to try to bring about separate employment-related issues for sharing between those agencies to have them covered. Misclassification is a big issue that we'll talk about. So as we move forward through this year and next year, they have a budget where they're seeking to increase their enforcement efforts with more investigators. It's going to be more of a problem, I think, for employers.
Great. Yeah, thanks. Good notes there for sure. I'm going to take notes too, Vinny, because you're dropping some good facts there. Those numbers about the claims each year too are incredible. So
yeah, it's a lot of people.
So just kind of a legal disclaimer here, a quick note. So we try to do this presentation to make to present as much information that's applicable to as many people as possible, as many employers as possible. So we're not going to cover everything that you might need to know depending on what industry you're in. And like Vinny mentioned, I mean, certain industries have specific rules. And yeah, if you're in the construction industry, especially I know New York State just passed some additional rules there. There's different wage orders in New York State depending on your industry, and they get a little bit nuanced beyond what we're going to cover in this presentation. So again, everything in here generally applies to all industries and most employers, but certainly before you go home and maybe rest more peacefully tonight, you'd want to go a little bit further and take it a little bit further if you're unsure if you're doing everything you need to do, and reach out so we can do a more specific audit for your business, because rules do vary based on size and industry and a bunch of other things. All right, so just a quick lesson here. Not that you want to know this stuff, but I guess it's good to have context. There are, several governing bodies in the U.S. for employers that cover a lot of things, including wage and hour law. There is the federal level, which is the FLSA, which covers federal minimum wages. Again, those are probably going to change soon. Overtime regulations, employee exemption statuses, so exempt and non-exempt, child labor and working restrictions, amongst other things, but those are the most prevalent ones people know about. And then in New York State, we have the pleasure of all operating businesses in New York State, and we have a lot more detailed rules, and in a lot of cases, a lot more beneficial rules to employees than what's currently, at least at the federal level. So we have our own minimum wages, which exceed those of the federal level, both from a salaried standpoint and hourly standpoint, exempt and non-exempt, payroll frequency rules, break rules for meal periods and things, and then really other specific rules about, call-in pay and things like that. These are the 5 wage orders here: hospitality, farm, miscellaneous, nonprofit, and building services. So again, each wage order in New York State has its own nuance. So if you belong to, everyone obviously belongs to one of those, but even if you wanted to take the time yourself to Google the wage order for your industry, you could and read through it, but we're not going to cover every detail of every wage order today. But just so you know, there are rules by industry that get that specific. All right, so the first area that we're going to cover today is employee classifications. So this first talks about whether someone is actually even classified as an employee, or whether you have them as like a 1099 contractor. So this isn't something that necessarily was as much of a concern in the past, but the Biden administration and the new DOL members at the federal level have really clearly stated that this is going to be a high priority agenda item, moving into the next, there's 3 years left still of this administration. So you really want to take a look at your roster of people working for you and to consider whether or not the contractors that you have should be contractors, or should they be W-2 employees. And maybe you didn't know that that wasn't just a choice that you could make based on your own preference, which I guess technically it is, but there's certainly like higher level of risk you're taking if certain criteria are not being met for those contractors, because they perhaps should be classified as employees under how the IRS would define that for their money-making tax purposes, but also the DOL for regulatory purposes, because if they're not employees, the DOL doesn't get to regulate them, and then they don't get to fine you for violating policies with them. So there are tests at the IRS level and DOL level, and then also at the state and the federal level. But generally, these factors that we list here are pretty safe, like overall arching factors to consider if you have contractors. So ask yourself these questions if you have contractors now, and if you can't answer a yes in a pretty solid way to all of them, would recommend considering adding them to your payroll. So do they work for others? Do they have their own LLC or some other type of like business filing? If they're only working for you and they don't have any of that, they're probably an employee, right? Because they're not basically providing their services out in the marketplace for others, including you. If you have a lot of control over what they're doing, so, specifically defining how they do their work or really, really specific details of what their work involves instead of just general outcomes for your business, that, is a red flag and potentially means that they should be classified as an employee. How you pay them matters. If you're paying them based on deliverables versus like an hourly rate for, specific work, that certainly might suggest that they are more of an employee than a contractor as well. And then there's other considerations as well. Obviously, if you're giving them benefits and regulating their time off and things, all that points to them being an employee. So again, the reason that this is regulated and the reason why the DOL or IRS would care about this, again, like everything in life, I guess, basically it comes down to money and power. So if you're not classifying them as an employee, that means that you are not paying as an employer. You're part of the employment tax on that. The employee doesn't get benefits, all these other things that the government would basically want you to be doing as an employer. So there is motivation for them to go after you. And Vinny, convince me if I'm wrong, but the probably most of these cases end up coming to light because an employee or a group of employee complains they're misclassified, right? It's not just random audits.
Yeah, I feel like we do see a lot, even the audits that come about, they've come about because one employee has filed a complaint, or sometimes in New York, I've actually gotten different answers from the like unemployment and workers' comp about whether they share information. I'm convinced that they do, but that they were triggered by someone filing a complaint, or an employer filled out some sort of unemployment paperwork and then the numbers were off. So even like sort of a self-inflicted error there too could cause it.
Okay.
But yeah, you have a lot of really salient factors here, and I think you've hit the nail on the head. You have all these different tests. It's a different test, no matter in different circuits, a federal court, of different agencies. But I think they boil down to supervision, direction, control, and these sorts of things. Do they have their own equipment? How are they paid? Who are they reporting to? What's the control of work? Those are sorts of things you could be asking yourself to try to get a better sense of it.
Great. And then, yeah, so the penalties of this, if you need more motivation to care about this, again, are basically back due taxes. So if someone should have been an employee, I don't know what the time frame they can go back is. Benny, maybe you could shed light on that, but potentially you could owe back all of those employment taxes you should have been paying, Social Security, all that kind of stuff. But also, the workers' comp and disability, premiums and coverage that would be due there, unemployment, costs, and then obviously fines on top of that.
Yeah. It seems like it's a little bit different in each. We just had one with unemployment, and they were really more concerned we were able to keep it confined to the period in which the particular person was paid the wages, or paid the money as a 1099, and then they kept it to that period for the monies that they said should have been salary, and then their contributions were underpaid as a result of that calculation. So I think it probably depends a little bit on who you're in front of in terms of what the look back period might be. And sometimes with the regulators, it can be very frustrating for employers. I like to adopt like more flies with honey. They just have so much power. They're not necessarily listening to legal arguments. And I think if you can take a little bit more of a softer approach with them, you might be able to get a little bit further with narrowing periods or information you're providing to.
Great.
So this question, which you hit upon, is a contractor truly in business for themselves. Under the Obama administration, the DOL had a memo out that it was long, but in essence, it said most workers in the U.S. are employees. It's been rescinded. We'll probably get another memorandum out from the DOL at some point in this administration that touches upon this issue. But there's a lot of gray area, and there's the risk question that we'll talk about. A lot of situations I see, I do think that a lot of the workers that employers try to classify as subcontractors, independent contractors, actually are more likely employees. It's obviously a gray area. It's a question of risk tolerance, but try to ask yourself, is that person are they like the roofer that I'm hiring for my house? Do they have their own equipment? Are they working for whoever else? Or are you really trying to have your cake and eat it too, where you reference power and money, where you want to control everything that they're doing, but you don't want to have the obligations of actually being an employer? So having an independent contractor agreement is not going to save you. It's one thing you can do. You can have someone form an entity, and then you're going through those factors that you talked about. You can do different things to try to make it appear more like a 1099. But at the end of the day, you're going to come up, if you're in front of a regulator and they have their own vision of what they think that is, and you still might not be successful with them. With unemployment, the only thing that they really cared about last time I was talking to them was whether the 1099s had an entity, or that we could prove that they were some sort of functioning business with a website. So it's always a little bit different depending who you're in front of. So I think it's a question when we talk with clients about risk tolerance. Are we talking about one worker, or are we talking about 100? That obviously makes a big difference with penalties. And like you said, you can get hit with unemployment contributions, fines for workers' comp, or if it's New York State Department of Tax and Finance. If it's more of a person who's asserting unpaid wage claims because they're an employee, obviously we get into the back wage scenario. So I think if it's just one person, maybe it's something where you're a little bit more comfortable doing a couple of things and tolerating that risk with them being a 1099. And in this area, the last few years, I don't think was more of a hot topic. It was really more of the states that were getting involved in the context of the gig economy with Uber and Lyft and DoorDash. And you saw, both in the courts and at the ballot box in California, where you have all these workers who, the governments, state governments are saying, well, Lyft and Uber should be paying unemployment taxes. They should be providing workers' compensation. And they were taking them to court in New Jersey as well, trying to have this classification basically undone. So the Biden administration, they have a labor and employment platform that they campaigned on. And the individual, I think it's David Wheel, who's head of the Wage and Hour Division, I think he said himself, he won't get into a Lyft because he thinks that they misclassify all of their workers. He appeared at a New Jersey press conference with the AG when they sued one of the ride sharing companies. So they would love to have some sort of legislation around this. I don't think that that's probably realistic, but certainly they're going to use the tools they have in their toolbox to try to make sure companies comply and classify the workers the right way.
Great. All right. So continuing on the topic of employee classifications, so once you determine whether they are an employee or not, if you do have employees, you then need to consider whether they are properly classified as exempt or non-exempt. So this is a commonly misunderstood area from my perspective with clients all the time. Typically, people interchange the definitions or the terms exempt and non-exempt for salaried versus hourly, which isn't technically correct, but most of the time, I guess those things go together. So this is regulated at the federal level by the FLSA. This status basically determines whether you can or should legally pay someone on either an hourly or a salaried basis. So non-exempt refers to someone not being exempt from being paid overtime for hours worked over 40 in 1 week. So in New York State and the federal level, you only have to pay overtime for hours worked over 40 in a week still. If you guys are in another state, you may have different rules, so just make note of that as well. But non-exempt basically says they're not exempt from overtime, which means you must pay overtime, which then also means you really want to and should be tracking their hours and frankly every minute that they work, because if they work over 40 hours, you need to make sure that you're paying them time and a half for that extra time. So generally the best case is to pay these people hourly, which is usually what we see people doing. And these are subject to federal and state minimum wage rates, which in New York State now well, in our area of New York State, I think it's $12.50 as long as you're not a fast food worker. We'll get to those on the next slide. And then exempt means that an employee would be or is exempt from the overtime requirement, which means regardless of how much time they work in a work week, they do not need to be paid overtime. So in this case, these would be the employees you can safely pay a flat salary rate per week and not need to worry about tracking hours for purposes of overtime calculation, although I'm sure Vinny would say, because lawyers like to follow the law to a T, that you should still track their hours in case they ever challenge this and they worked and would then be able to defend any overtime claims. But it's not as serious as tracking hours for non-exempt people. And there's also a minimum wage associated with the exempt category as well, which is something that a lot of businesses and owners don't really seem to know as much of. But there's also a duties test. So let's talk about that. And that's something people don't usually know. So again, to be exempt or to be paid salaried, or, most importantly, to not have to pay overtime, an employee has to be paid a minimum salary amount per year. And you can see that on the right of this slide. So there's a few different categories for exempt classifying positions. But the minimum in New York State is actually higher than the federal level, at least right now. So most exempt or most positions would fall into the executive and administrative categories of exemption status. And the minimum annual rate for that is $48,750. And that is as of, basically January 1st of 2021. We'll see if that goes up in the new year. There's no plan for that yet, unlike the last few years. And then professionals is a little bit lower. That's still regulated at the federal level, I believe. And then other categories are even lower. All of the federal categories probably will increase under the Biden administration. Obama tried to do that before he left and couldn't get it done. So we'll see what happens there, and we'll see if it's higher than the New York State level, because if it's not, it doesn't really matter to us. So in addition to those minimum wages for salaried exempt employees, there's also a duties test. So you can't arbitrarily decide to pay someone on a salaried basis just because it's easier from a payroll processing standpoint and you don't want to deal with tracking hours or something like that. A position is required to fall into one of the many exemption categories. Again, most commonly it's going to be executive or administrative. And that means that the position has to have certain responsibility levels and duties associated with it. So to be in the executive category, it's probably the easiest test. I mean, basically, if a position has employees reporting to them, the loss is 2 or more, and the person has like hiring and firing decision-making ability over those people, you should pretty safely be within that executive category. Administrative is a little bit more subjective and nuanced, but it has to do with kind of the level of decision making and discretion that the person has over matters of significance, which has been probably interpreted a million times in case law at this point. But it can't just be like spending money that's not significant enough. Buying things alone isn't significant enough. It has to be decision making that's not just following like a standard procedure, SOP or protocol. It has to be really independent discretion making and judgment. So like usually HR positions, even not at the manager level, could fall into this category based on what they're doing in that job. But it's a little bit more nuanced. And then you can see the other categories there, which are less common and a little bit more obvious, and I won't go into those. But this is one area, if you guys have people that you're paying salaried or classifying as exempt, I definitely would recommend a thorough audit of those, because I see a lot of this being done wrong. And if someone's misclassified, you might owe them, back salaries if you weren't up to the minimum, or they could claim that they're non-exempt, win that case, and then claim they worked all this overtime over the last 3 years or whatever, and now you owe them all that overtime, especially if you didn't track the hours. So really kind of like high stakes area here, I would say. And then non-exempt, again, this is pretty easy. It's everybody else. If you're unsure, the best thing to do is just to default to non-exempt or to pay hourly, even if the position could be exempt. and you pay them on an hourly basis and pay them overtime, that's okay. That's more beneficial in the eyes of the law to the employee. So if you're scared at all, just default to hourly non-exempt, I would say. There's no tests involved here or anything like that. And here are the minimum wages as of right now for hourly workers in our region of New York State. It's different downstate, but we'll see if these go up in 2022 also. So if you take away nothing else from my kind of like HR point of view tips, non-exempt employees should be paid hourly. You should be tracking their hours. Again, I believe you should be tracking and paying by the minute probably. But make sure you're tracking that time and paying for all the time worked, and then paying overtime for any time over 40 in a work week. Make sure that you review all positions and people being paid a salary. If that means you're probably treating them as exempt, do they qualify to be paid that way under both the duties and the minimum wage test for salaried people or for exempt people? And then just review all, review all minimum wages in general. I've seen hourly people being paid under minimum wage before also, and obviously that's not cool or legal either. And then if you think you have an issue or are concerned at all, reach out to myself or Minnie, and we can help you audit your situation and fix it before New York State or the DOL, federal DOL comes in to fix it, because then you're going to owe fines on top of back pay. Any notes that you want to add here, Vinny?
Yeah, I'm glad you touched upon the duties test, because I do feel like that's the first thing that kind of goes to the wayside, where people think, oh, I paid them a salary and I pay them a certain amount and then it's okay. Obviously, that's not okay. And then there's this other aspect of it, which I think it probably almost gets taken for granted, in that there's you have to be paid on a salary basis, and that you have to receive a regular and consistent amount on a biweekly basis without regard to how much you work. So, you work 80 hours one week, you still get $2,000. You work 20 hours the next, you're still getting the same amount of that biweekly salary. So the person's pay is not supposed to change. So, you might not have to pay them overtime, but that's because there's a give and take in the relationship from like a policy perspective. And there are limited, the circumstances in which you could make deductions under the FLSA regulations. But you have to be very careful about it, because if you're doing it wrong, they can lose that exemption. And then you have the consequences that you referred to. So, for example, if you don't necessarily have to pay for the full week of an employee's first or last week of work if they weren't working, or if an employer has a bona fide paid leave plan in place and an employee is exhausted his or her leave, you could make a full day deduction. Partial day deductions wouldn't be allowed in that circumstance. So you gotta be careful if you're not paying that regular amount. Like you said, I look at it almost as like a default. If you're unsure, you could always pay hourly. It seems like it's more of like a psychological demotion for some employees, but you can always try to characterize it as, your salary derived by, whatever that hourly amount is. And they could have more in it. If you're paying overtime, they might end up making more money. And I think you referred to the salary test increase, that this will be something that might happen. And for New York employers, it might not really be relevant, where, before they were going to increase it federally from 23 to 47,000. It didn't go through before the Obama administration went out the door. It was enjoined at the Fifth Circuit, and the DOL secretary, Marty Walsh, when he's testified in front of the House, and he said that he thinks even the new amount that was just changed at the beginning of, I think, 2020, the $35,000 level, is like much too low. He said the rule is under review. So I would suspect that they try to increase that again. I don't know if they try to change the duties test. They didn't last time, and it was effectively the same administration, or Obama era veterans that are doing it now. So we might see them try to increase that $35,000 amount. More relevant if you have workforce outside of New York, and the highly compensated exemption might change too. So something to watch as time goes on here.
Yeah, definitely something to watch. I think we're all waiting with bated breath to see what's going to happen with minimum wages in 2022, if anything's going to happen at all, even at New York State level.
Definitely.
I get questions every day. All right. So that kind of concludes the extent of what we're going to cover with employee classifications. So again, if you have questions, certainly pop them in the chat or in the Q&A function, and we'll be happy to answer them, or you can reach out afterward. All right, so let's get into time and attendance practices, which obviously play into wage and hour as well, because these determine also what people are being paid and are also regulated by the same governing body. So the first thing I want to mention is meal breaks. So I'm sure most people know you are required to give people a 30-minute, minimum 30-minute meal period break if they work over 6 hours in any one like work day or work schedule or shift. And this applies to all employers and employees. There's really, really narrowly defined exceptions out there, so we won't even bother talking about them, but generally this should be happening. So it's 1 unpaid 30-minute meal period break and then 2 paid 15-minute breaks. So we're not going to talk about the paid breaks because, again, those are paid. So there's not a ton for anyone to go after with you on those in terms of like a payout. Where I see a lot of problems with clients getting claims or just having issues is with the 30-minute meal periods. So, you know, if you're not paying these, this is an issue, right? Because if you're not paying for these, you're auto deducting them. A lot of times people have that set up in their system. You know, they assume their employees are taking this every day. They auto deduct 30 minutes from their pay every day as a result. But if the employee didn't take that meal period at all, or if they didn't take the full meal period, potentially there's a risk for claims there because now you deducted too much time from someone's pay, time that they were working, and potentially you owe them money for. So this is a really big area of non-compliance or risk, I would say, because all that then trickles and adds up to into even potential like overtime payments that you weren't making because you took out too many minutes or half hours from their pay that they worked that then, you know, didn't take their number of hours over 40 for the work week. So this is an area that I would definitely review if you're not kind of having people clock in and out for these and record them manually, or if these are unpaid, especially, you want to make sure your practices are all set up the best way possible here. So these are my really major takeaways that I usually have when I review this with most of my clients, but one is make sure these meal periods are recorded. So that doesn't mean like your system's recording them by auto deducting. It means an employee is physically clocking in and out for their meal period breaks, because then there's no dispute whether or not they took their break or how long they took it for. And in the eyes of New York State, if it wasn't recorded, it didn't happen. So, you know, I could technically just be really disgruntled and upset and come in and claim that for the last 3 years, I didn't take any of my meal period breaks. And unless you can prove I did take those, you're probably going to owe me for 3 years of 30 minutes times however many, you know, days that I worked. So that sounds insane, but it's true. So my biggest takeaway is make sure they are recorded. If you don't want to, you know, a lot of pushback I get here with clients is like, oh my God, we can barely get people to like clock in when they start work or when they clock out at the end of the day. How are we possibly going to enforce them doing this now 4 times a day? You could just decide to pay for the meal period break. So just make your 30-minute meal periods paid. That way, even if the person doesn't take it, you know, you're technically not compliant because they should be taking it. However, there's no motivation now for someone to come after you for a payday because you're paying for that time and it's, you know, added into their hours total for overtime and things like that. So that's another option as well. It's obviously an additional cost to your business, but, you know, maybe that's just worth the convenience or worth the risk mitigation for you. And then again, for non-exempt employees, this is more important because they're the ones that have the overtime obligation over 40. Do not auto deduct. Payroll companies are happy to set up your payroll like this, or your time systems like this, but it really is not best practice. And again, you're pretty defenseless against claims here unless you're really recording all of the time worked and whether these are taken. And then make sure they're uninterrupted and away from workspaces. So if an employee is clocking out, but then they have to dip back in to answer a question or something like that, technically that's uninterrupted and you should be paying for that time. So encourage people to clock out, get away, go to the break room, that kind of thing. Anything you want to add here, Vinny? I know it's a hot.
Yeah, I think those are great points, and especially where you referenced, like it's these little ticky tacky things that add up over time, where it happens for a couple of years, and then you multiply that by all of your employees, and every week, and the damages can be quite significant. The one question that I've had come up a few times recently is sort of like a scenario where you have employees probably on that first shift, factory or non-factory workers, they get their 30 or 60-minute break, and it's going to have to be over 6 hours. It extends over that 11 to 2 time period. And there's a lot of questions in that context, like, well, can they leave? Can they waive their meal break and leave early? And there's some DOL FAQ guidance about this, where they talk about how there's a Court of Appeals test, 3-part test, that the operational needs of the industry make compliance impractical, that you get a waiver from your employees. It's openly and knowingly, there's no coercion, and then that the employee gets some sort of benefit through negotiation or return for the waiver. And so I think some employers are like, okay, well, they're getting the benefit of leaving early so they can leave the meal break. But then that same guidance deal, I was like, no, that is not acceptable. There might be that, like, leaving early is not a sufficient enough of a benefit for you to regularly, every day, allow them to waive their meal break. It could be okay on like a occasional basis, but not on every day. They look at it as substituting time off during the workday for time off at the end of the day. So you'd have to figure out some sort of other benefit on that. And I think Lisa had a question about how does this apply to other states. And Lisa, I'm not sure if I'm answering this correctly, but like what I think Emily's going through are really New York state-based rules. So if we were looking at Florida or somewhere else, we'd have to look at what they specifically have on it. So we've talked about the federal, which is applying obviously across the entire United States. And then there's a lot of New York labor law. I think what we're talking about now, and probably for most of the rest of the presentation, is probably New York specific that Emily is going to touch upon.
Yeah, I don't know what Florida, so the 30-minute uninterrupted, unpaid required break after 6 hours is a New York state law, but I would imagine there's something in Florida that requires a meal period, and then whatever that is, all the same probably best practices would apply, especially if it's, again, like an unpaid break. You'd want them to record it, and it would, in Florida, you still have to pay overtime over 40 hours because that's a federal rule. So for that reason, you'd want to probably track that time too, but I don't know what the specific meal period requirement is for Florida. Florida doesn't have their own DOL, right? Like,
I don't think they have like a discrimination based. Yeah, it's funny, like, and I don't mean to make this political, but really you could sort of track the amount of employee protections almost based on those states that vote a certain way. The ones that you would think of that vote Democratic typically have both, discrimination in departments of labor. They have so many more regulations. It's really almost like startling when we do counseling in other states, and we get questions about, some of these other, it's like, there's nothing. I mean, the panoply of questions that we have to deal with in New York is so much more exponential. So I know there's a discrimination agency in Florida, but don't know if they have a Department of Labor.
Yeah. And then someone asked, what's the source of requirement of the 2 15-minute breaks? That is New York State. So if you look up any of those wage orders, the 15-minute breaks are cited in there. But again, those are paid. So all these kind of concerns about it don't really exist because it's paid. So if they're not taking them, it's not like you're falsely deducting time or owe them past due wages or anything like that. So not a lot of motivation for anybody to take that case, right, Vinny?
No. Gotta make money.
Yeah. All right. Are we good to move on from meal periods?
I think we definitely covered it.
Okay. All right. So I just want to mention tips really quick. I don't know if there's anybody in this presentation that work in the hospitality industry, which now in New York State is the only industry that you can claim the tip credit for. But there is a different minimum wage for tipped employees. I think basically no one's paying at this rate anymore because of the pandemic. Because tips disappeared there for a while. I know all my clients in this industry have raised their minimum wages above the tipped minimum. But there are different rules here. There's really specific rules here for tips. And I know the federal DOL keeps dabbling and making other rules about it. But technically, if you have employees who work in hospitality and they're getting tips, you can pay below the regular minimum wage and supplement up to $4.15 per hour of their pay with the tips that they're getting from employees. They took this out of the miscellaneous industry to be eligible earlier, I think it was last year. So if you're not in hospitality, I think like Delta Sonic, the car wash place or whatever, probably got like killed with this rule. You cannot claim the tip credit anymore. So same with like salons and places like that, you no longer can do that. If you were doing it before. So you should be making sure that you're paying that when you're paying employees the tip minimum wage, they're making enough tips each week that account for that difference to get them up to the minimum wage, which is $12.50. If you are doing that still, there's specific tip to overtime calculations that are different from regular overtime. So that's something to look into as well, and reach out if you have questions about that. There's also new rules and kind of like evolving rules about tip pooling and tip sharing and what employers can allow and what they can regulate, rules about managers not sharing in the tips and things like that. So if you're in the hospitality industry, this is a super highly like targeted area right now. And I think will be more so in the next 3 years. So I know just in Buffalo, there's been quite a few claims and class actions on this. So reach out if you're in this industry at all. All right. So just some other quick rules on general wage and hour topics here before we get into time off stuff. Paying manual employees weekly. So in general, if you have employees who are not at, I would say like a professional level, manual has been interpreted to mean basically like everyone who's hourly now, you should be running payroll weekly. And Vinny will talk about the implications of that in a second. There's also some other nuanced rules for different wage orders for spread of hours pay. So that means like if an employee is splitting their shift throughout one work day, so they work, they leave for a couple hours and they have to come back, you do need to pay extra pay for that time. And then call-in pay applies to most industries in New York State also, where if someone is called into work and then is sent home, or just gets called into work and only has to work a couple hours, you do minimally have to pay them for 4 hours of pay for that time. So you're paying them either 4 hours or the time they worked, whichever is greater. And then I'm just going to throw this little golden nugget in here, but this is a whole other topic we could talk about. If you do have non-exempt employees, so employees you're paying hourly who are non-exempt, and you're adding any other components to their pay besides their hourly rate, so like any bonuses that are tied to performance, that's any commissions, anything like that, you definitely need to consider how you're calculating their overtime, because technically that extra pay has to be used to calculate what their overtime rate is for the pay period they earn it in. That's a very complicated subject. It's something you can program into your payroll system, but if you are hearing this and you have hourly employees that you're paying bonuses or commissions to, make a little note to reach out, because this is a very New York State specific thing. And it's something that I personally have worked for employers who have had major claims in this area on, where they had inside salespeople that were getting commissions and they weren't calculating overtime this way. So make a note of that as well.
Yeah, that's a great point, Emily. All these little things that you might not be aware of that can be harmful. And so this one, it's just something that has come about more recently because of a case that happened 2 years ago. But if you are paying a physical laborer, and that's someone under the labor law whose job is 25% or more physical, and it's very low standard of like what constitutes physical activity, you should be paying them weekly. And this matters because there's a rash of class and collective actions coming out where if you are doing that, they can, find someone who suffered from that. And the damages, there's the case basically said there's a private right of action, and the damages are 100% liquidated damages for every week that's late. So obviously the worker typically would receive all their wages. They're just receiving it every 2 weeks instead of 1 week. They're not really being underpaid, but the way it's calculated is you're on the hook under New York labor law for 6 years. Looking backwards, you basically just divide up that person's W-2s, which, and when you get into a class context with, similarly situated workers, this can be incredibly significant right away. So it's not really settled law, but there's definitely a lot of case law that supports that position. And I think it might change or get settled within the next year or two, but just check how you're paying your workers if it's not, if they're doing certain tasks and they're not being paid weekly. So one more thing to worry about.
Yes. All right. So I know we're running a little bit short on time here, so we might breeze through the time off portion of this program, but we're happy to answer questions afterwards. And again, this will be available afterward, and then actually have some extensive resources on these subjects on my website, also in the resources tab, so you can check out more there. But really quick, you probably heard about this last year, but effective 2021, all employers were required to provide paid time off basically now to employees under the paid sick leave rule. So for sick time, again, you should already have something in place for this year, but this is something that will be regulated by the wage and hour division as well, because it has to do with employee earnings. This did go into effect January 1st. The time is protected and not optional to be provided. So if you weren't offering time off to certain employees before, again, I think about restaurants here because, typically it's just a part-time job and you're not getting benefits. Everyone basically in New York is required to provide this now, all employers, and you can see the breakdown at the bottom here. So either 40 hours or 56 hours, depending on your size. And, unless you're super small and have small revenue, it's probably got to be paid. So this is not a time off requirement above and beyond, any time off you're already offering. So I think that was something that was misadvertised in some cases with different HR providers or whomever was advising employers out there. If you have an existing, or you had an existing PTO policy or vacation policy or even sick time policy, you could basically have just modified those in order to meet the minimum requirements of New York State paid sick leave. So if someone told you to do that, maybe you want to reconsider changing it again for 2022. If that, adding another 40 hours or 56 hours of paid time off is no joke, and it definitely is an added expense across your entire employee population. So we could revisit that as well. This is only required for qualifying reasons defined by New York State, which has to do with domestic abuse and being sick or a family member suffering from those. Unfortunately, it doesn't really matter because you can't require proof to use this time off unless someone misses 3 or more days. So it's kind of like an honor system. My advisement to certain employers, especially restaurant, is to still call it sick time and to still state it can only be used for that time, because hopefully maybe only like 20% of the population would lie and abuse it. So it might mitigate your damages there. Just a pro tip there, maybe. And then there are many other specific rules for this law. I have a whole recorded webinar on this subject on my website. It's pretty far back in the archives, but if you're interested in knowing more about this than you ever wanted to, you could watch that. But again, if you're unsure whether this was implemented at all or compliantly last year, I would recommend reaching out and we can chat through not only what you need to do to be compliant, but some best practice tips for this, because I've written probably 3 dozen policies or more on this subject for clients, and some of them have been pretty creative, so happy to help here. Yeah, anything you want to add there, Vinny?
Yeah, I think you pretty covered it, and I know we're running out of time, so if anyone has any questions, feel free to jump in, raise your hand, pop up in the chat as we finish up here. But you touched on a lot of the salient points there. Always remember too, part-time employees, seasonal employees, they are also entitled to this. And if you have a PTO policy that meets the accrual, carryover, and use requirements, you don't have to come up with a new one. I think, there's these technical compliance issues that come up with like, how are you tracking? Because you're supposed to track sick and provide employees information. But if you have a PTO policy, like the regs and everything don't really speak to that. Hopefully at some point we get clarification, and we haven't, but it does say that if you at least meet the accrual, carryover, and use requirements, that you have no further obligations. And hopefully you're tracking at least PTO on that too. So I feel like everyone is probably totally exhausted with this topic by now since last September.
Oh, thank God we had COVID to distract us, right? Add the calculation. And like I mentioned, there's a webinar on my website. The caption looks like this, so you can check out more there. Just a quick mention as well, not going into these, this could be a whole other webinar, but New York State requiring the paid sick leave now is that's just one type of leave that you're required to give as an employer. It's a little bit different because it's like paid time off from the employer while they're working. It's not subsidized through like a disability carrier or anything like that. These are all the other leaves you're required to give. Hopefully you know this and you're doing this if employees qualify. But just a side note here. And then New York State also has all the COVID leave requirements and the paid sick time for COVID, which is above and beyond the paid sick leave that was required this year and all these other things. So again, very extensive resources on my website about this if you want to check those out to understand when you need to be providing that. But a lot of categories of time off and leave now in New York State. So main takeaways: ensure you're minimally compliant with New York State paid sick leave law for time off. Obviously, if you're doing above and beyond that, great, and you shouldn't need to worry, but at least make sure you're minimally compliant, which also means having it in payroll, tracking the hours, and also tracking on pay stubs people's balances. You need to do that as well, according to the law. Do not stop offering paid and protected time for COVID reasons. That has not ended yet. If people have to quarantine or isolate because they have symptoms or they were exposed, things like that, you do have to still provide, in most cases, paid time off for that. So, and for getting the vaccinations, and there could be boosters coming out, which will, create another flurry of that activity. So make sure you know that. Again, look at my website for information on that, as well as tax credits available to subsidize that. Understand attendance management implications. Since the paid sick leave is protected, it does basically make a lot of attendance policies pretty useless, at least until they use up that sick time. So make sure you're not disciplining people for protected absences, and make sure your managers know that, and know when job protected time off is required. Again, we could probably maybe we should do a whole webinar on that leave topic at some point, because that's a big area where I see people doing stuff wrong, is leave. A quick note here, payroll providers are great. Whoever you're using for payroll or time and attendance tracking, it's probably like technically right from like a tax standpoint and all that stuff. But they don't help you really from an employment standpoint or an employment best practice standpoint. So they're happy to do the auto deduct for the meal period breaks. They're not going to make sure that your PSL policy that you're programming necessarily is compliant. The paid sick leave, a bunch of stuff. So there's some that are better than others in helping you through that. So something I would say to consider as you look into next year: do you like your provider? Are they helping you? Do they have the technical capability that can help streamline some of this administrative burden, that kind of thing? And if you're looking for recommendations, I certainly have worked with many of these and know good and bad providers. So I'm happy to help provide a consult on that as well. And I do look at that when we go through the wage and hour audit to make sure that everything we're talking about is consistent in your system too. So if we did that together, that would be a part of that. And then Vinny, I don't know if you can talk about 2022. It seems like there's not a ton set in stone yet, but.
Yeah, it's a lot of like you said, wait and see. For the restrictive covenants, I always think it's important for employers, if you have key employees, key accounts, key information, like how are you protecting it? States are taking action if you're outside of New York. So always make sure you're keeping up to date with what they have. They have pay requirements, notice requirements. Biden has directed the FTC to look into some sort of like uniform standard that would really be groundbreaking. We don't know what that'll look like yet, but you can always update yours in the meantime. And there's always things you can do to make them more enforceable. Something I think is really interesting is, we never really had paid federal benefits up until the Families First Act. And then there's also now federal paid parental leave for federal employees, but there's been, and there is actually, I think there is some bipartisan support for like basically a paid FMLA. It would have some additional inclusions for like domestic violence, sexual harassment, mourning. There's a couple of different bills floating around, but there's some hope that they might actually do something in the context of this major reconciliation package where they don't have the votes outside of it, but they might be able to shoehorn it in there. So that's something when they're talking about this $3.5 trillion bill, it actually might get included in there. So that would be really interesting to see that happen. And it's just another thing for everyone to jump and learn on about.
Yay. Yeah. No shortage of business for us, Vinny.
Yeah.
Not that this is fun stuff to do. Someone asked, they have a policy in New York State, their New York State employer, they have a PTO policy that offers 3 weeks of time with a 40-hour rollover option. Like, without knowing greater details of that policy, that does sound beneficial enough to still meet the paid sick leave requirement. So you shouldn't need additional paid sick leave on top of that, but we still want to take a look at the overall policy, because from like an earning standpoint, the PSL policy requires people to be able to earn the time at a certain rate and things. So we'd want to make sure all of that was at least consistent with that law as well. But generally it sounds like you're okay. So you just want to make sure you're letting people use that PTO time for those PSL reasons and it's protected and all that stuff. All right, hopefully near the end here. Again, the caveat at the end is, we've talked about a lot of general subjects here, which apply to most employers in most situations, but there is more detail. So make sure that you reach out with specific questions and don't assume if you're doing everything we discussed here that you're totally in the clear. If you have questions or need more help or interested in any, consultations or services, here's our contact information. Like I said, my website, allyhrpartners.com, has a ton of free resources, checklists, webinars, just articles on a lot of these subjects that if you are a pretty qualified HR person, you probably can find most of your answers there. But of course, I'm happy to answer questions or just confirm anything. So check that out. I have a newsletter that you can subscribe to where as legal updates happen, you're getting those. I'm sure that Mathias does as well. Mine usually are a little more slanted to be practical for the employer. So consider subscribing to both. And then I have social media and things as well that you can follow as also. Anything you want to add here, Vinny?
No, I just think working with you, I think we're both happy to be like a resource, like don't hesitate to pick up the phone. And I always, it's always helpful to see what other people are doing and, you take it to the next situation because everyone's got a different one that you're trying to apply, whatever the new law or regulations is.
Absolutely. Yeah. And I'm pretty sure like you, Vinny, there's not much that could come our way that we haven't seen. Unfortunately or fortunately.
Yeah.
And here's just a little slide talking about my services again in my business. But if you're looking for any, HR help at all, if you don't have that within your business, maybe you just have a payroll person or just higher level project support and initiatives. This is what I do with, again, mostly small and medium-sized businesses, but happy to help in any of these categories. And then a little snippet on Lipis.
Well, thanks for coming, everybody. Really appreciate everyone showing up. Like Emily said, we'll send around the slide deck and a recording, and don't hesitate to reach out if you have any questions.
Yeah, any other questions at this point? I mean, we're happy to stick around for a few minutes. You can throw them into the chat or the Q&A. We're not too far past the time here.
Yeah, thought it was looking like it was going to go way over, but got it back on track.
Yeah, we got the tough stuff out of the way in the beginning.
Yeah, exactly.
All right. Doesn't seem like there are any more questions. So thanks again, everybody, for joining, and we'll send this around, and yeah, don't be shy to reach out.
Thanks, Emily.
All right. Thanks, Vinny. We'll talk to you soon.
Take care. Bye.